The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another fantastic episode of the Power Trading Hour. And it doesn't matter where you're at. You could be in Timbuktu or Kalamazoo. You could be wearing a fez in Morocco or selling ice to Eskimos in Alaska. It does not matter as long as you're here at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have going on? Well, S&P's back to flat. Had a lot of stocks out here retest some lows. And, you know, the setup does not look good for a continued downside. But, stocks and markets can remain oversold longer than you can remain solvent, is the old wisdom. But certainly when we look at what's going on, we're more oversold than we were going into the election in November of 2016, and certainly have more shorts in the market and seeing record shorts in the last few days. And that generally is a good indication that the end is nigh for the downside until you get those people to cough up and buy their shares at higher prices, in which case, if we are in a bear market, it all starts out over again. So I'm not a big fan of betting on the end of the world here. I remember when the firing started in the Gulf War, I think the market was up strong for 3 weeks after that in 1991, right? 1991. So we've got a lot of stuff going on. And yeah, I can understand it. A lot of people have a very specific worldview that Nero is fiddling while Rome burns. And it's hard to say no to that. But we're a big country. Our elected officials can go off and wander into the woods for a while. And, generally, we'll still be okay. It's not like one person runs the whole show. It's why we have 3 parts of government. And depending on which one you think is wrong, the other 2 hopefully will come to their senses and take care of stuff. But I can see that. I can see all the things in front of us. I can also think of one other thing that could make this market really fly, and that is a dramatic drop in the pandemic. And my guess, educated, is that we're probably coming to that fairly quickly. And I think a lot of people in Wall Street are really happy about being able to buy some stocks at a deep discount these days. Now, does that mean it will happen? No. But I have a feeling they think it will happen. And I'm looking for a very strong, probably week or so, to move the market back up, just because I've seen so many stocks, like I said, go down, test lows, and refuse to go any lower. I bought a few of them. Almost all of them have a story behind them. In the long term or longer term, in the Tech Insider, almost all of these things are geared to, if something truly hits the fan, they will do well, probably why they are doing well today. And up on a day when the S&P is basically flat. I bought a lot of the stocks at the lows when we sold our calls on the GDXJ. We did that throughout the lunch hour and had a good win on those. Now I've got a couple more that are going to need some help with the market going higher, but I still got a couple more days. We still have a little bit more left in the day today, but literally I've got stocks that have the highest short interest going back for 5 years, 6 years almost now. So we shall see if we get any spark of higher prices. They could run very quickly, and I'm not going to hang around a long time. When the market now gives you some cash, there's not a whole lot of just waiting next week for the next rally. I think you kind of have to grab it with both hands and make a dash. New car, caviar, 4-star daydreams. Maybe you're going to buy yourself a football team. Time to grab that cash. That just kind of came to me during that, just because of the grab the cash with both hands thing. But just an idea. And of course, if you don't know, that's the words to money from Pink Floyd. So what else do we have? Like I said, some of these things, are they down 1% or 2%? Truly. Do I own them? No. Would I buy? I did buy some calls and some stuff, but I think that there's a good chance that they'll all pan out. As I said earlier, we were in the daily newsletter in the GDXJ. I found some, like I said, I think on last Friday I talked about it. Didn't say what I had bought, GDXJ, but we were able to buy for around $1 and sometimes less calls that were literally had like 10 cents of premium in them for the GDX. And it was kind of bizarre that literally there was no premium really to speak of in these things. Everybody was just assuming gold would go sideways. But everything in here looked like it was going to do exactly what it was going to do. And do want to talk about why I thought it was going to, and why I said in the newsletter that I thought gold was going to $1,850 this week, and why I sold. Another reason to talk about it. But this is kind of the pattern we talk about, where you are below the 3x3 or 25-day moving average or something on a longer term. It is below it. You go above it for a couple of days. You go back below it. And then when you're strong, as we were even pre-market on this, and even into yesterday, when we came out of the weekend and it didn't sell off extensively, I meant gold, it was prime for the pump. There was also some decent amount of short sellers in the GDXJ. Not exactly sure why. I think there's a lot of things to short. Gold is not one of them. All you need is a nuke to blow up one day. And if you're short, you could be out on your rear end. But yeah, good day for the people in the gold mines. We bought these, I think, for around $1 or so, sometimes a little more, sometimes a little less. But a 39 call selling between 42 and 43 means that you're going to make 200 or 300% on your money. So it's a good day for the path of least resistance. We shall continue and return like MacArthur to the Philippines.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And as we come back, S&P's down 12, Dow down 145, NASDAQ off 27. As Zach said, SPY filled the gap yesterday. Look for your 3-gap reversal price piece. Thanks. Not getting it, but it's options expiration week, so maybe there's something else going on here. But certainly the S&P's not reacting well. Some of the other ones are certainly showing fairly decent support, but we'll see what the end of the day comes like. Generally on options expiration week on this Wednesday, something big happens around 2. So my guess is that we're closing down 100 on the S&P by the close, or we're closing up 20 or 30 points. Generally, there is a big break at somewhere around this period of time. And they've been busy selling an absolutely massive amount of shorts. So maybe if you're bearish, it goes down slower, then you can make money if you've got those puts. And of course, if you're bullish, you see all those people turn and run away when the market goes a little higher. But not much going on. Okay, other things happening out here. Let's take a quick look at NVIDIA. NVDA continues to go down. It's probably close enough now that it looks like it's going to try this gap at 240. It's actually a gap up. Didn't have all that much volume, about 50 million shares. But you know what? Everybody's just pulling back. I suspect one of the reasons on NVIDIA is just how hard the cryptos are being hit. And I just think that if it was on AMD, it's probably a better play, but I don't believe it either. And that is that as these cryptos pull back, that people aren't buying video cards for mining. And even with these things down, in fact, I saw a factoid this morning about cryptos being a month ago being worth $3 trillion, and cash in them to being only worth $2 trillion. So $1 trillion has gone to money heaven over the last 30 days. But it's kind of tough to say. It's very tough to see a market that's this close. But yeah, we could have I'm expecting some kind of a super big move one way or the other by the end of the day. I'm thinking higher just because of the lack of volume in so many stocks. But yesterday, I thought we'd probably get some real low trend numbers in some of the ETF heavies, and we didn't get that. We got just the opposite kind of a close out there, but we shall see. 877-927-6648. I don't think MU is going to fill the gap at 83. I'm thinking the other way. But we shall see. It's coming right up to the uptrend line, and it pretty much hit exactly that on a longer-term scale. Earnings were good. They're going to be better. Even if the economy pulls back, this is a company that's going to grow over the next year. So I'm not thinking that if you want to be short one, that this is it. And it probably doesn't look any better than it's going to look today. If there's a stock at all, one stock out of all of the semis that's probably going to do well this year, it's certainly going to be, or at least in my opinion, it's going to be Micron. So maybe that's it. See what else we have out here. Okay. I know we got some more emails from today. Let's go back up here. Okay. Yesterday, I didn't get my emails till about 5 o'clock. I'm not exactly sure why, but none of them came through. Let's do a little history, and then we'll move on to the rest of the stuff we have for today.
Then it's all just a little bit of history repeating.
On this day in 1999, that's in the past, by the way, RIM, R-I-M, introduces the BlackBerry. The original BlackBerry devices were not phones, but instead were the first mobile devices that could do real-time email. They look like big pagers. I should know. I had one on my hip for 2 years while working at Anheuser-Busch. This is somebody else that wrote the article in the early 2000s. In 2001, I visited the BlackBerry production facility in Waterloo. I actually interviewed a bunch of employees that had been there at one time in Ontario, Canada, when we were looking for people around Ontario to come to work for us. It was surprisingly small at that time. The way I heard it, the name BlackBerry came from the similarity with the buttons on the original device that had the surface of a blackberry fruit. Those crazy Canucks. The reason I wanted to bring this one up is something about the Canadian discount, what's called the Canuck discount in stock markets. And that is RIM was just one of many promising young companies in Canada. But because of the way a lot of the laws work, you have to pay a lot of people that would normally get minimum wage here in the United States, 20, 30 grand. I remember back in 1998, to break even, you could sit at home on your rear end in Canada, and you had to make $26,000 to break even because they just give you stuff, free place to live, free food, free everything, free health care, everything else. So if you were kind of a lazy jackass, all you did was sit around. I think a little bit, that changed a little bit in the 2000s, but it's probably back to that again. So anyway, we had to pay a lot of people just that normally would be, starter positions. You couldn't get any. And so they paid a lot of people that probably shouldn't have made a lot of money. And that meant that a lot of the people that should be making a lot more, like the programmers and engineers, were not, and they couldn't afford it. So what would happen? Big companies in the United States would come up and poach the greatest and best engineers. So why they may have been great in Canada, they only lasted for a short time. Headhunters were everywhere trying to hire people. People that I hired got hired away back to California. and that is the way of it. Called the Canuck discount, at least in the stock market guys that I knew up there in Canada, was always a problem. I wanted to move some of that here in the United States, but man, they were just addicted like crackheads to all the programs that Canada had for people like us that exported huge amounts of product. So I think that there's a real problem with ever them becoming a very large company if they aren't a very large company already in Canada. The Canuck discount on this day in 1999, first big product in a while out of Canada. And of course, it fell behind because all of the employees were poached that were worth anything anyway. Be back in a minute.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
As we return, we got some more emails here that we need to go through. Okay. What else do we have here? There we go. Question about Alcoa. What do you think of it? You had some good energy on the way to the top. 57.57 is support. Below that, you don't want to be in it, probably. But looks good. It's above the trend line, long-term trend line, which is what I'm looking at today. So you haven't even really made a signal that would be anything other than continued bullishness. So I don't see anything wrong with sitting on your hands. It depends on where you got in. You don't want to take a loser on it, but yeah, I think it's fine. It may take a while to consolidate around these levels, but doesn't look bad. Okay, Pete's asking about the XLF and financial sector. Even with good earnings from one of the big banks today, was up earlier in the day. It also just came down to its long-term support. So this is it. This thing has to start going higher in the next couple of days. Any close lower than my 25 by 5 displaced moving average would say long-term sell signal. Right now, though, hey, I'm getting more Skype sounds. Hopefully I'm still on the air. But you've got, yeah, am I? Okay. You've got a, what are you going to say here? A day with about half the volume you had yesterday. Okay, thanks. But yeah, I'm hearing a lot of Skype sounds on this side. If you have the board set up or something. Okay. Anyway, you're there. So if you wanted to go long the XLF, this is it. This is the line in this long-term line in the sand. Below this line, you're going to probably see a acceleration of the downside. If it holds this line, you're probably going to see a 50% bounce, which would take you to about $48.75, I suspect. Yeah, 70, 80, something right in there. There's this gap. Do I have the gap on? Yeah, I got the gap on. There's just not big. It's just not a big enough gap statistically out here. Let's go back out here and look at this. Yeah, it's just not big enough compared to this thing gapping out around. But that'd be resistance, which is about 41.10. But yeah, if you think that this actually going to be a raising right environment and the inflation's going to come off, then yeah, I think at least fundamentally, you're thinking that being in the XLF would be a good thing. What we've seen is everybody telling everybody that they're crying in their soup. Generally, it's just the opposite. No one believes the market's going down. Everybody says it's going down, which makes me think that the real money is probably in everybody being way too short. And for very brief amounts of time, you're going to see some huge, very strong moves, probably counter trend, but still very sharp moves. Continue to see the market weaken off 17 points on the S&P cash. So we shall continue to keep an eye on it here. Anything else going on here? Nope. Let's go back to the emails. So a top in the XLF, you got a high volume high that's still out there, 4170 on January 13th with 52 million shares. So that would suggest that you have probably about a 70% chance of retesting it. Like I said, probably one of the best risk rewards here and fairly light volume. But would I do something today in these? No, they don't move that fast. I would wait and see if something happens late in the day and see what happens on tomorrow. But yeah, it may be one of these things. Like I said, they were trying to drive the price down. I saw a little bit more evidence for the big banks doing that over the last couple of days, trying to give options at least to some of the lower end guys, lower brokers. So maybe it's all part of a plan. These guys always have a plan. 877-927-6648 would be a great day to get some other stuff done, like giving me a call. Okay, so we got Alcoa, got the three gaps. Let's take a look at NVIDIA. I know it's down 2% NVDA. I do not own it. Got the gap. Okay. I mean, the energy is not all that exciting on the way back down. This actually looks long-term bullish, at least. This leg down since the gap up on the 26th of October came back with about 2/3 of the energy, or 1/3 less energy off this 346.43 high. I know it's got a huge PE. It also has some amazing growth opportunities ahead of it. Maybe this is just a pullback. I have not gone along this thing in a while, waiting for a giant pullback, but weirder things have happened. Volume's a little bit more than you would probably like for today for finding a low. To send emails to path@tfnn.com. Okay. I don't know if I caught this yesterday. Apple seems to be holding up in earnings. Again, if you closed your eyes, forgot about the market, what would you think? Gap up on the 7th of December for Apple. That happened on 120 million shares. You're into it today on 60. So let's say that it gets 90 by the end of the day. You're still off 25% or more, 30% on the volume coming back out here. It doesn't look any good. Doesn't look really good for significantly lower prices. If the whole market moves lower, could it get back down to 67, 66.50 maybe? I think it could, but I think that's probably more than likely. You're going to see people go after this in the next couple of days. Mostly unaffected by higher interest rates, and certainly have all the cash in the world and don't need any. So these will probably hold up continually better. Another email out here for, yes, it is from one of the members in the den. But that's why all those are in my Tech Insider newsletter. They're all disaster stocks if bad stuff happens. A variety of bad things will all make them go extremely higher, and they are holding very well. We'll be back in a minute. We'll talk about Microsoft.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
As we were going to talk about Microsoft for Jan, a new emailer today. Appreciate the email, Jan. Tried to run higher out here, went a little sideways. Not a bad day after spending $69 billion. I had a lot of people ask me about what's going on in that. And you had a big company. You could get it at a discount because the CEO was embattled. You paid up a bit for it, a lot of people think, but it wasn't a company that was in actual trouble with the products that they have. And, of course, you're trying to put Sony in the corner with Baby on the gaming platforms, and that's well worth, it seems ludicrous, but, yeah, it's well worth $69 billion. To get rid of Sony's PlayStation. And buying a lot of those Activision games means that you can put them on the tail end of any new products. They'll probably make them available, but slowly and maybe not as good. And that's always been the way of Microsoft. We'll make our products a little bit better, just a little bit quicker, just a little bit more polished than we do for other folk. And that's kind of it. So just don't think that there's a whole lot here. It does look like Microsoft is probably going to hold 300. I don't see any reason to run off and scream. They still have, they could do 2 more deals with the kind of cash that they have now. And guess what? As things get better over the next year, I mean, the pandemic wise, gaming is probably going to be a little bit more used. People get out a little bit more in the summer. We'll come back in the winter, play more games. Games still good business, but the big thing is going to be new supplies of GPU chips from NVIDIA and AMD and Intel and some others. And I think that's all good for that part of the market, especially good for Microsoft. But am I expecting to blow out the highs this year? Yeah, we'd have to have a really good recovery in the pandemic. But we've got a ton of cash. And if things got much better, much quicker than anybody ever thought, that cash is still floating around and sloshing around. It's not as bad as you would think. So I'm thinking that we could have a couple of fake, well, I wouldn't call them fake, faux rallies before we find a actual bottom in the market. But the first one may be no war. Second one, better than expected end of the pandemic. Third, a political system that rewards capitalism a little bit better than the one that we have now. So a few things going on. Okay. What else do we have? Okay, we got that one. Got that one. And if I didn't get your emails, sorry. I think I responded to everybody last night. For whatever reason, they came in late. Okay. Yeah. Okay. And another question. Do you think we could really get a big rally? I think we actually could. We're coming down into support out here. Like I said, we've got more shorts than any right now. If you look at the FINRA data, over the last 5 days, we've had everybody and their dog pile in. And generally, that's when you get your rip your face off rallies, which is generally, if I'm on, trying to sell into a market, I generally wait until the market allows me to sell into it. Maybe that's something I learned from Jesse Livermore's book, read about 100 times so far. I think everybody could get one at it. Back to Lattice Semiconductor. We've got about 4 minutes. I wanted to wrap it up. What is that? LSCC. We were talking about this one yesterday. Since the big semis, and it's pretty much at support today and was at support yesterday. They make a lot of stuff, but they do make ASICs and do make programmable logic chips. As I said yesterday, the company that I was with all the way through the 90s into the millennium was the biggest user of Altera's chips in the nation. Normally, these chips are fairly expensive, about twice as expensive as if you make them as an ASIC, which is a kind of a unchangeable version of a programmable logic chip. But a lot of things actually need to be changed in the field, like your router. There's software, firmware upgrades. And if your product changes a lot or updates a lot, it needs to be. Well, ours was, I think we went through 4 different versions of hardware in about 7 years. And we had everything 1, 2, 3, 4 in Roman numerals behind the product. But certainly the push on that was that you could, we were always finding little things we could make better and tweak better, and we didn't feel like waiting a year and a half before we released it in a new version. So all the chips were actually upgradable, and the chip you could pull out of the board, and you could reflash it, and it would be as good as new. So for our older customers, our customers that had existing versions of products, if they wanted to, they could send us the board and we'd upgrade it, test it, and send it back to them already. So it's a great thing to have. They are like Altera. They are like Xilinx. They just work at a very smaller level than both of those. But, with both of those getting tied up, Altera with Intel and Xilinx with whoever's coming after them, Lattice could be a good third wheel out here when this does settle as a potential buyout for other people that want that programmable logic. And the reason that everybody wants it, both Intel and other folks, is this is really kind of the stuff of where you make specialized products. Intel has been doing it since they bought Altera, and that is machine learning. You can make these things incredibly fast if they don't have to have a processor, and they just drag in data and process it and send it back out. And that's what Intel has done, and to a lesser extent, NVIDIA. But they're kind of on the same side of that business. But programmable logic is a big business, as I described yesterday. Think of it as having Lego inside a chip. And with software, you can tell it how to rearrange all the connections in the chip so you can make it do what you want to do. At a very base level, well, say you had 2 buttons and you wanted to reset the thing. Both of them were held down for 5 seconds. That's something that you can program extremely easy in these programmable logic chips. And generally reset buttons and stuff like you see on your modem are a real reason why those chips exist. We'll be back after this.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secure investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Question from Zach. He says, besides Wyckoff, Tom O'Brien, and Tim Ward books, do you recommend any volume-oriented books? I would say both of those books are good. Wyckoff's kind of dated. So yeah, I would look at those both of those books. Tom's book, if you're more aggressively trading. Tim's book, if you're wanting to understand the kind of a more long-term view of the world. But yeah, that's kind of it. I'll think about your question on Lattice. Maybe answer it tomorrow when I get time. Made my head hurt, so we'll see. As we go to the end of the show, as I said, generally, we get some kind of big move on a Wednesday during options expiration. Maybe it comes back in here. Maybe it starts tomorrow. Any close above 45.96, I suspect would put a lot of people on the wrong side of the market, as we've gotten a tremendous amount of people short yesterday. I suspect the same thing is happening today. That is, they are piling on. And so if you're looking for 5-10% bounces on expiration day, you could certainly get it, or even starting late today or tomorrow. Way over the tips of their skis now. And generally, you find a very important short-term low, not a long-term one, when everybody gets as short as they are now. So watch out. You could get some kind of news. The Fed's kind of stepping in here. I think they got involved in the bond market a little bit. The DLP was lower. It's 141.65 now. So keep ready for fast markets. Have a fast finger. So when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.